If you think a recession is the worst that can happen, prepare for a shock. Warren Buffett, the investment wizard, has a clear and direct message. What's coming is even scarier. In a world where the US national debt is skyrocketing, prices are rising like never before, and the money in your pocket is losing value each day, the situation is much more severe than it seems. And the worst part? Most people haven't realized it yet. While everyone is focused on avoiding a recession, there is something much bigger, something that could devastate your wealth if you're not prepared. Want to know what it is and, more importantly, how to protect yourself? Keep watching and discover the strategies that few know about, but can make all the difference for your future. Before we dive into the details, make sure to hit that like button if you find this information valuable and subscribe to our channel. By doing so, you'll stay updated with the latest insights and strategies to safeguard your financial future. Join our community of informed investors and take control of your destiny. Now, let's get into how you can prepare for what's ahead. Buffett has always been a master at identifying market subtleties, and inflation is one of those topics he addresses with insight. He observes that inflation, that old foe that erodes the value of money, is becoming an increasingly tangible challenge. Imagine you have a dream home in mind, but each day that passes, its price goes up a little more. The same is happening in sectors like steel, where prices seem to have a life of their own, growing incessantly. This scenario underscores the importance of protecting your investments, as while money loses value, prices rise mercilessly. What Warren highlights here is the need to be smart and strategic. With the cost of things rising, every financial decision needs to be well thought out. If the real estate market is becoming a roller coaster, other areas are not lagging behind. The price of essential materials is going up, which ends up reflecting on various sectors of the economy. And here's the point. It's not just about numbers, but about how those numbers affect our lives and, most importantly, our wallets. And more importantly, how this inflation can impact our future plans if we don't take measures to protect ourselves. Now, think about the long-term consequences. Buffett is not just warning us about today's price increases, but about how this could unfold in the future. He reminds us that inflation is not just an immediate problem, it's a warning about what's to come. If the price of homes and steel is skyrocketing, what does that mean for your life plan? How will you prepare? That's the hook that leads us to think about the next topic: how inflation is directly influencing the real estate market. In the real estate market, what was already expensive is becoming almost unattainable. He notes that the constant increase in costs in the sector is a clear sign of inflationary pressure. Homes that were once affordable now have prices that seem to rise every week, creating a barrier for many. And even with these high prices, people continue to be willing to wait for deliveries that take longer and longer, hoping to secure a solid investment. This phenomenon shows how demand is out of sync with supply, making the real estate market a true battleground for those seeking financial protection. But why do people continue to invest in real estate, even with such high prices? It's simple. In times of economic uncertainty, brick and mortar are seen as a safe haven. Buffett emphasizes that, although prices are high, the perceived value of owning a home remains attractive. After all, it's a tangible asset, something you can see and touch, unlike stocks or bonds, which may seem more abstract to some investors. However, he also warns that this rush into real estate can be a double-edged sword. As the more people pile into the market, the higher the prices go, further fueling inflation. And then comes the crucial question: what is your strategy? Is it worth entering the market now, or is it better to wait? For those already in the market, this might be a good time to reassess your goals and business strategies. For new entrants, it's essential to consider the ability to cope with inflated prices without compromising other areas of your financial life. This scenario leads us to reflect on the impact of economic policies and financial stimuli, which are driving this price escalation. Buffett reminds us that economic stimulus policies, so praised for injecting money into the economy, have a hidden side that few consider: rising inflation. When the government puts more money in people's pockets, the intention is to stimulate consumption and the economy overall. But this additional flow of money can quickly become fuel for inflation. Indeed, more money in circulation can mean more purchasing power, but it also means that prices tend to rise, not just for consumer goods but for assets like real estate and stocks. With his vast experience, he He highlights that these stimuli, although necessary in times of crisis, come with long-term consequences. He also warns that while the stimulus gets the economy's engine running, it can also overheat the system, leading to a difficult-to-control inflationary cycle. With every extra dollar circulating, the risk of devaluation grows, making it increasingly challenging to maintain the real value of your investments. This is one of the reasons why he emphasizes the need for financial education and protection. Now, consider the cumulative effects of this stimulus. With more money in circulation and inflation knocking at the door, people need to be even more strategic. Investing in resilient sectors and companies that can pass on production costs to consumers is one way to protect yourself. But Buffett also invites us to reflect. Are we truly prepared for the consequences of these stimuli? How will this impact the long term, especially if national debt continues to grow? This leads us to the next topic, which will focus on the impact of this debt on inflation. When it comes to national debt, Warren Buffett does not mince words in describing the risk it represents. He observes that the growing accumulation of debt by the United States is a ticking time bomb that could explode in the form of uncontrollable inflation. The temptation for politicians to resolve this debt by issuing more money, or even paying with devalued dollars, is strong. But this strategy is dangerous because by devaluing the currency, they are actually feeding further inflation. And this, as we know, directly affects the purchasing power of every citizen. History shows us how indebted countries often resort to devaluing their currency to relieve the burden of debt. However, this quick fix can turn into an inflationary nightmare. When the government prints more money to pay off its debts, the value of the dollar falls, and this is reflected in higher prices for everyone. In this scenario, he emphasizes the importance of being prepared and understanding how this dynamic can affect everything from investments to daily living costs. The impact is felt in the real estate market, investments, and any asset that relies on the strength of the dollar. Given this context, the question remains, how do you protect yourself? In times of rising debt and possible devaluation, investing in real assets and companies with a strong market presence is crucial. Companies with solid brands and essential products, like Coca-Cola, can pass on inflation costs to consumers while maintaining their profitability. Financial protection involves understanding these dynamics and adjusting your business strategy to stay ahead. Now, as debt continues to grow, how can we invest smartly and minimize risks? This leads us to the next topic, investment strategy. It's common sense to have a solid investment strategy, especially in times of inflation. He believes that the best investment one can make is in oneself and in companies with robust business models. Imagine investing in brands synonymous with quality, like Coca-Cola. These companies not only survive during inflationary periods but thrive because they have the ability to adjust their product prices without losing customers. The beauty of investing in strong businesses is that they offer a layer of protection against money devaluation. In an inflationary scenario, investing in companies that require little capital and generate consistent profits is a smart strategy. Think of businesses that don't need to constantly reinvest large sums to keep operating. These are the real winners when inflation comes into play. A practical example? Technology companies that offer digital services where the cost of expansion is relatively low compared to the return. This business strategy allows investors to maintain and even increase their returns, even as inflation starts to erode other sectors. However, Buffett doesn't limit his suggestions to investing in companies. He also emphasizes the importance of investing in personal skills and education. In a volatile market, those with unique talents and specialized knowledge will always have an advantage. And here's the crucial point. While assets may fluctuate with the economy, the value of your knowledge and skills is something no one can take away from you. It's this education that provides true long-term financial protection. And speaking of education, how can we start investing in ourselves? That's what we'll explore in the next topic. Inflation is the greatest enemy of fixed dollar investments. He teaches us that when inflation rises, the value of returns on these investments, such as bonds and savings accounts, tends to fall. It's like watching your financial reserve shrink while prices around you keep rising. In this scenario, what once seemed like a safe haven can turn into a trap, especially if your returns don't keep pace with inflation. Therefore, the warning is to be cautious of relying solely on investments that lack flexibility to grow in inflationary environments. So, where's the exit? The suggestion is to look at businesses that require little capital and that, even in times of high inflation, can generate robust profits. Companies that sell essential products, for example, have the ability to pass on rising costs to consumers, maintaining their profit margins intact. A clear example is basic consumer goods companies, such as those that manufacture hygiene products and food items, which people will continue to buy regardless of prices. This is the resilience Buffett seeks in his investments and advises everyone who wants to protect their wealth. And it's not just about large companies. Smaller businesses that provide essential services or have well-defined niches can also be strong allies against inflation. In a world where prices are constantly changing, having investments that can keep up with these shifts is crucial. But to ensure these investments work in your favor, a well-defined strategy and, of course, constant education are needed. And speaking of education, let's explore how investing in yourself can be the best strategy of all. The best investment you can make is in yourself. He believes that, in times of economic uncertainty, such as when inflation is out of control, your skills and knowledge are your greatest assets. Think about it. The value of the dollar may fall, the real estate market may fluctuate, but what you know and can do will never be devalued. Personal development is the true key to personal growth and financial protection. Investing in education, whether through courses, books, or practical experiences, is something that will always yield returns. He gives a simple example. Imagine improving your communication skills. The ability to express yourself clearly and persuade others is one of the most valuable in the business world. Reading books like How to Win Friends and Influence People by Dale Carnegie can be a great start. Education in areas like this can open doors and create opportunities in any economic environment. The more you learn and develop, the more valuable you become to the market, regardless of external fluctuations. But it's not just about technical skills. It's also about the importance of personal development in areas like discipline and rational decision-making. Investing in yourself also involves creating an environment that supports growth. Surrounding yourself with people who challenge and support you, such as a mentor or a learning community, can be as crucial as any course you take. And speaking of the people around you, let's now understand how personal relationships can directly impact your success and financial stability. Warren Buffett, in addition to being an investment genius, has always emphasized the importance of personal relationships in building a successful life. He reminds us that the people you surround yourself with have a huge impact on your journey, both professionally and personally. Choosing your friends wisely and, most importantly, your spouse, can be one of the most significant investments you make in life. A positive and supportive environment is crucial for facing economic challenges and achieving personal growth. After all, in times of uncertainty, having people by your side who push you and keep you on the right path is invaluable. Throughout his life, personal relationships have been a constant source of wisdom and strength. Having people around you who share similar values and challenge you to be better creates a virtuous circle of growth. These relationships are not only important for emotional well-being, but also directly influence your financial decisions and how you navigate the ups and downs of the market. In other words, the right people around you can make the difference between making an impulsive decision and a well-grounded one. Choose your companions wisely. If you are surrounded by people who constantly make irrational decisions or do not share your goals, it can affect your own ability to act rationally, especially in times of crisis. Rationality is one of the most important skills in investing, and to cultivate it, it is essential to be surrounded by people who help you keep a clear head. Let's now see how maintaining mental clarity can be the key to avoiding financial pitfalls. We already know the importance of making rational decisions, especially in the world of investments, where emotions often take the reins. Even the most intelligent individuals can fall into the trap of making impulsive choices when they set aside logic in favor of instinct. Rationality is the cornerstone of any successful business strategy, and it becomes even more crucial in times of economic uncertainty when markets are volatile and pressures are high. Buffett illustrates this point with examples of investors who, driven by the fear of missing out on opportunities, end up making risky decisions that do not align with their long-term goals. He reminds us that patience and discipline are virtues that must be cultivated, especially in times of economic turmoil. When the market is falling, for instance, the temptation to sell everything to avoid losses can be strong. but it is precisely at this moment that rationality should prevail. Instead of acting on impulse, conduct a detailed analysis of the fundamentals and a clear assessment of the risks. Maintaining rationality is not just about avoiding losses, but also about identifying real growth opportunities. In a world where information is abundant and external pressures are intense, the true challenge is to filter out the noise and focus on what really matters. It is necessary to develop a critical mindset and constantly question whether the decisions we are about to make are based on solid data or fleeting emotions. This ability to make informed decisions is what differentiates great investors from mere speculators. The question remains, Wizard. Are you ready to apply this knowledge? Think about how your life could change if you start investing in yourself, making rational decisions, and surrounding yourself with the right people. How would your journey unfold if you implemented the investment strategies he suggests? Don't wait until it's too late. Start now to protect your financial future. And of course, don't forget to subscribe to the channel and activate notifications. This way, you'll continue learning more about how to tackle these economic challenges with the wisdom of one of the greatest investors of all time. Are you ready to take the next step?